Let's get over to Commerzbank's offices in London and global equities strategist Peter Dixon. Hi, Peter. Good morning.
Hi.
Peter, is the Fed right to focus on the balance sheet?
Very good point. I think the general consensus among central bankers is that it's the stock of holdings which matters for inflation, because ultimately, or indeed activity, because ultimately it's the stock of money which feeds through to impact upon the economy. But I think many of us feel that it's the flow of purchases which is important, particularly from a market perspective. And of course, what the Fed is doing, it's buying more, so it's increasing the flow, and of course, it's maintaining the stock. So I guess it's having it both ways at the moment.
We had a guest on already, Peter, today saying that policymakers have got to throw the kitchen sink at the problem still to ensure we don't go down the Japan route. I mean, throwing the kitchen sink at it, whether it's on the fiscal side or monetary side, QE side, I mean, is it going to be enough now?
Well, the question is, what's left? We've thrown a pretty big sink at it already. The problem is policymakers are running out of road. Yeah, they can buy more assets and in a bid to increase the quantitative easing policies on both sides of the Atlantic, it has to be said. But the real problem, I think, lies in the banking system. Until the banking system is fully capitalised and until it starts lending again, I just don't think QE is going to be effective. And I think anyone who says that this is similar to Japan, I think, has got a pretty good case.
How long then before the banking system do you think will be fully capitalised?
I think it could take years. Normally when you see a balance sheet recession like this, it takes 5, possibly 10 years before we get back to something approximating normality. So let's not expect a normal recovery anytime soon.
So what's the message today you want to hear, Peter, from Bernanke and Trichet?
Well, the message I'd like to hear is hope that things will get better. I think the reality, however, is that that's not something central bankers can deliver very quickly, as we've just discussed. I think what we therefore can hope for then is clarity. A clear message about what the Fed intends to do and how the quantitative easing policy will work in future, because it's had only a limited impact on the economy so far. And I guess we also want to hear indications as to just how big a probability the Fed assigns to this much feared double dip.
Is Trichet's message, obviously it's different, Peter, because his economy is outperforming the US's, but as we saw from 3 months ago, things could change quickly, can't they?
Absolutely. I think where the Fed goes, other central banks may well be forced to follow later, or at least will have their arms twisted in order to prevent them from doing things they might otherwise want to do. So I think while Axel Weber can stand up and say, well, we'd like to remove these special liquidity measures in the early months of 2011, the reality may well be that if the US slows sharply, the Eurozone will also slow, and that will force the ECB's hand to some extent. So I think the ECB has to be very careful about looking at the whole global picture and not just focusing on events here in Europe.
Anything, do you think, will be mentioned about the yen? The talk, gosh, it's been loud, hasn't it, in recent days and weeks about intervention. Will it be touched on at all or not?
Well, I think the yen is primarily a Japanese problem. The yen is just too strong for comfort for Japanese exporters. And what we seem to have at the moment is a fairly reluctant BOJ. No. It doesn't seem to want to do much to tackle the problem. So I think we may well hear something from the Japanese about the yen, but it's certainly not something that the Europeans or the US are concerned about right now.
Peter, thanks a lot. Have a good weekend there. Peter there from Commerzbank.